Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Joining us today for a special episode is Kevin O'Leary, Mr. Wonderful, star of ABC's Shark Tank, joining us from the biggest Bitcoin conference in the world happening in Miami right now. Kevin, thanks so much for joining us from Miami.
Great to be here. Thank you so much.
Yeah, I'm going to have you act as our correspondent a bit here today. I know the show just kicked off, but tell me a little bit about the energy, the vibe right now surrounding the show.
Well, last year at 2021, they were expecting like 2,500 people and 200,000 showed up. So what's happened this year is they've taken over the entire convention center. It's a massive Woodstock-like feeling outside. The whole world has come to this place. I think something like 200 to 225,000 people are going to be here for the next 3 to 4 days. And we've got some major policy shifts occurring. The big thing that's happening here is Senator Lummis is coming to do a keynote. That's a federal senator. That's a big deal.
Yeah, so let's talk about that because I know you've been very vocal on Biden and his tax plans, and recently saying that he's going to go after crypto wealth as a way to help close the budget gap, figuring Uncle Sam could net 11 billion in new income by 2032. So thoughts on what Biden's doing here?
Yeah, I don't think any of that's going to happen. I mean, Biden is talking about a wealth tax now and taxing unrealized gains. For most entrepreneurs in America, that is an un-American idea. What made this country great was entrepreneurship and the employment of capital. And obviously, Biden's plan would be trying to take that capital back before death. That's simply un-American. I don't think there's a chance of that happening. Biden's popularity has dropped to new all-time lows. I don't want to get into politics, but he's worse off than Trump was at this time in Trump's administration. The chance that he gets any policy through before the midterms is zero. I think his party will be decimated in the midterms if he keeps pushing policy like this. So there'll be nothing happening after the midterms. And we'll have to wait till the next general election before any of these ideas get pushed forward. But this plan is DOA, in my opinion. Not a chance this happens. And that's a good thing. At this point, I like gridlock in Washington. We've had enough spending. Let's end it now. And let's coast in for the next 36 months with nothing else done. That would be good.
Okay, so obviously regulation will be big topic there at the conference. What's your gut feeling? What's going to happen? Is there going to be a major crackdown on cryptos coming?
No, I think there are 5 policy vectors in place right now. And here's the basic premise, okay? If you look at the world the way I do through the institutional indexing, the majority of the world's wealth is in sovereign wealth and pension plans in America. So it's great to talk about retail investors in Bitcoin, but they're absolutely nothing burgers. In fact, Bitcoin's less than $1 trillion, which is nothing in the context of assets. Now, how's that going to change? The only way that changes is if we get policy. In other words, if we allow institutions to buy Bitcoin and cryptocurrencies. And in order to do that, we need the SEC and the regulators to rule. Now, there are 5 different initiatives. Number 1, the Lummis bill. Number 2, you've got a really good thing happening with POTUS's statement. He came out and said, look, I'm the president of the United States. I believe in the productivity opportunity of crypto. Let's examine it. So that's a good thing that came out of the executive order. Then you've got BlackRock, who's saying, look, we understand the potential, but we want to talk about ESG concerns. Then you have the SEC, another piece of policy just last week talking about doing carbon audits on every company, including crypto companies. And 24 hours old, the Haggerty transparency on stablecoin bill just hit the market 24 hours ago. It's only 2 pages. So this has tremendous potential. All of this suggests that there's potential for policy that could really help the crypto markets in a good way.
Okay, you mentioned the executive order, so a question there because buried in it was talk of a, or discussion surrounding a coming Fed dollar, Fed coin. How far away is that reality for us, and how does that impact the sector, Kevin?
I don't think we should look for the government to produce innovation in financial services. I think we should look to them to regulate. I don't see them having much in terms of getting programmers to go to work to do a new coin. They should simply license a series of stable coins, perhaps use the Haggerty Bill, which makes two things very important: an audit every 30 days of the underlying assets, and you're not allowed to use anything, any asset that has a longer duration than 12 months. So that means you're basically building a money market fund, which we allow thousands of in this jurisdiction. So all you're doing is applying the same rules that basically guide money market funds like at Schwab or Fidelity and applying that to a USDC stablecoin or another stablecoin. That bill alone would bring billions of dollars into the balance sheets of corporations, which are not allowed to buy stablecoins yet because we don't have policy. Now, regarding the other aspect of POTUS's executive order, and this is the reason I'm here at Bitcoin for the keynote today, we've got big problems with ESG, big problems with ESG. And that's what we have to talk about, because right now there's a lot of shots across the bow of Bitcoin miners, particularly the public companies that are doing it.
Okay, so let's talk about that because I want to ask you. You're obviously very active in the space. Someone who's looking at investing, let's hone in on Bitcoin here. What's the best play? What's the best exposure? Miners, the ETFs, pure Bitcoin play. How do you do it?
If you're allowed to, the best and easiest play is just to buy the ETF in Canada. There isn't an ETF in the United States yet. But the best strategy prior to the ESG issues that were brought forward by the SEC, BlackRock, and POTUS himself was to simply buy a basket of the public miners, companies like Riot and Marathon and Hive and Hut 8. But you can't buy those anymore because they're using carbon offset credits. And the SEC is saying they want to audit those every quarter. And everybody knows the carbon offset market is complete BS. You can't go mining stuff using gas or carbon fuel and then buy an acre of the rainforest and say they offset each other. That's complete BS. And so it's not going to survive an audit. But worse, you can't find an actual company like an auditor to sign those statements. They are not going to take the risk when the SEC makes it law. When the SEC says this is law, they're not going to sign carbon offsets on a statement each quarter. So those companies' cost of capital are going to go up. There's a new generation of miner emerging that's only using hydroelectricity and nuclear power. Those are the ones that are going to survive.
So what do you think is going to happen on the miner front? That's they're just some companies are just going to be wiped out.
No, they won't be wiped out, but they'll basically have to start spending their coin to stay afloat. They won't get access to inexpensive capital. And you've got an institution. They can either buy one that's using clean, sustainable energy and hydro, or they can buy a dirty miner. What do you think they're going to do? So the market's going to decide. They'll just basically starve them from capital. But that's okay. These are the pioneers for this industry, and we deserve to give them accolades. They didn't know this ESG stuff was going to come, and they got the arrows in their back. Too bad. What can you do about it?
Okay, I think you're a fascinating species, Kevin O'Leary, because you mentioned Nothing Burger before. You used to speak that way about Bitcoin. You've come out saying you did a 180, you've embraced it. You now have 20% exposure to cryptocurrencies. Before I ask you about specific coins, I just want you to reflect back on that moment where that was the real turning point for you, where you were like, you know what, I've changed my mind. This is the future.
Look, if you're an investor, you have to read the room. You have to understand when policy is changing. You have to understand when the regulator is changing. What changed my mind was the first inkling of regulatory support in Canada, then Switzerland, then Germany, then United Arab Emirates, and then in England. Now, it hasn't happened here in the US yet, but when I saw this happening, I thought, I've got to get ahead of this. And I started my first positions in Ethereum and Bitcoin, and then expanded my offerings into blockchains and level 1, level 2, and then started investing in the equity of companies like WonderFi, Immutable Holdings, and BitZero. These are companies that are basically riding the wave in a regulated environment.
You mentioned certain cryptos there, and I know you've increased your exposure. You like Solana. I know you've mentioned Hedera in past interviews. So, how do you determine or choose which crypto to go into, Kevin?
That is an excellent question. And the only way you can treat crypto and different coins and tokens and blockchains and productivity tools is to think of it this way. Bitcoin is not a coin. It's software. Ethereum is software. Solana is software. HBAR is software. It's all software. And I don't know which of these is going to work, so I take a portfolio approach. I've got 20%, which is the maximum I can put into the operating company. That's as much as I can put in, but I've got 32 positions within that 20% holding. And now I have to wait and see what emerges. I'm going to get some losers. I'm going to get some winners, but I only need one big winner to get a great return. I don't know which one
Is
it's going to be.
is there one that could be the next Bitcoin, or is there no next Bitcoin?
I don't think you're ever going to pass the granddaddy crypto that's going to continue to become harder and harder to mine and just get more scarce. It's real estate to me. To me, it's AAA office real estate. I'm holding my coins in perpetuity. My assumption is it'll at least match the index's performance over time, if not beat it. But productivity tools like Solana, which would increase the speed of transactions on blockchain by 100-fold, I think that has a lot of potential. I want to own that. I like what's happening with Avalanche. I like what's happening with Helium. I own that too. I like a lot of these different, properties. Polygon, another one that's aggregating transactions to reduce gas fees on Ethereum. These are all good ideas. I've met all the developers. I'm very fortunate I get into their deals, and I take positions long term. I
Yeah.
don't know who's going to win. I have no idea, but I bet in my portfolio I got a couple of winners. It's like Shark Tank.
Basically. Okay, let's talk about adoption for a second here. 2020, 2022, they say will be a huge year for the crypto space in terms of adoption. We've seen, for example, the licensing of Binance in Dubai. What do you think will be huge adoption steps this year, Kevin?
I think the only adoption that really matters for
Yeah.
institutional allocation is the SEC and the US regulators setting policy on stablecoins, Bitcoin, blockchain. We've got enough bills on the table now to start to take these and adopt some of the suggestions inside them. We need the regulator to regulate. It's great that these different jurisdictions are providing licenses. I mean, Canada was the first to grant a crypto exchange with a dealer broker attached to it. And now it's trading in every province. I know that because WonderFi owns it. We bought BitBuy recently. But also countries like Argentina, Brazil, the United Arab Emirates through Abu Dhabi, the ADGM. These are institutions that are granting licenses. But the big one that is still the question mark out there is the SEC and the US regulator. We need that on board to get allocations of 1 to 3% in crypto assets in the pension institutional funds. And they're not going to do it until they see it. They're not going to ever go offside when BlackRock says you can't do it, and the regulator says you can't do it, and all the money managers won't do it, and there's no infrastructure to provide for the compliance departments, and the auditors won't even sign the statement. So we have a lot of work to do before this is going to become a major asset class, and it's all around policy and regulation.
Final thoughts, Kevin. You said it. You're the keynote speaker in a few hours at Miami Bitcoin 2022. What's going to be your key message? Bring it home for us.
Well, everybody wants to try and understand the 5 vector policies initiatives that have just emerged in the last 6 weeks. I've done a deep dive into it. I've read all of these bills. I'm going to give my personal opinion of what's going to happen, the good, the bad, and the ugly. And then, of course, because we're at a Bitcoin conference, there's no escaping this ESG issue on Bitcoin. We have to deal with it. And what I'm going to be talking about is institutional capital moving to the new model of sustainable energy. Proof of work, which is how you mine Bitcoin, is actually going to drive efficiency in energy sources. It's going to push us to get much more hydroelectricity. Most of the dams built in the United States in the last 100 years contemplated turbine inside them, contemplated hydroelectricity, but never installed the turbines. Now, capital, like mine, will go and find these dams that can get enough gigawatts out of there, and we'll pay to put the turbines in. That way we can avoid all this carbon audit issue. And that we can be clean miners, and we'll be giving back to the communities as we generate electricity that was contemplated 50, 60, 100 years ago that was never installed. So here we have it. Bitcoin mining and data centers are driving innovation in power and energy that's sustainable.
Kevin O'Leary, thank you so much for joining us and for being our eyes and ears down there in Miami. Have a great show. Good luck with the keynote.
One last thing, the only watch to wear at this conference is the Snoopy. Why? Because it's to the moon. Snoopy's going to the moon on this watch.
Kevin, did you know that's my favorite character of all time? You're speaking to my heart right there. I need
You
to get
know,
one of those.
this watch went up 4,000% in value because all the Kryptonians wanted to buy it because Snoopy's going to the moon on it. So I had to wear it today.
Here's a fun fact. I do a pretty good drawing of Snoopy. I'll send you.
Terrific.
It'll become an
Uh,
NFT. Who knows?
yeah.
Thanks,
All
Kevin.
right. Take care.
And thank you all for watching this edition of Stansberry Research. We'll have much more coming your way, so be sure to stay tuned. And don't forget to stay on top of all the interviews at danielacambone.com. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.